Hi, you're on the channel where programmers trade and show you how it's done. Look, let me show you on the right side. You can see this is a live stream, meaning our servers are running 24/7, and we show everything openly, completely around the clock. There's really nothing like this anywhere else. Usually all the influencer traders are trading somewhere on Telegram, showing some trades in photos and so on. We get it, that's not very interesting. But what if we did a live stream 24/7, broadcasting on YouTube? Well, that's exactly what we've done. On the right side, there's a stream. You can even switch to your mobile phone and watch it there. All the trades happening right now are live. Every single trade is broadcast in real time, absolutely all of them. It's actually really cool. They're all shown on the stream 24/7. But keep in mind, on YouTube there's about a 2-second delay. Just so you know. We also have spot trading. You can check out spot trading on this same channel, Intellect City Spot Trading, where there's an open portfolio. Lots of people, investors, friends, close friends, and people around us have been following this portfolio since 2018. So on the right side, you can see the numbers, you can open it all live, see which projects we're holding, which projects we're going to buy or sell. We also want to talk about the spot algorithm in the strategic section, where all the trades are shown. And based on this algorithm, the portfolio itself exists. In other words, the portfolio itself follows this algorithm, and many people follow the portfolio itself. A close circle of friends, investors, and so on, everyone does it on their own. If you really want to get the panel, check your USDT balance and, as they say, benefit and profit, then pay attention. Right now, you're on a channel where programmers create these algorithms, bots, webhooks, and so on. There's a lot here. You're not on a channel where someone just uses some specific indicator they bought somewhere or something like that. So right now, you're on a channel where a team of programmers is developing various algorithms, and at the same time, we're also showing a live broadcast. Not just futures, but in this video, the main focus will be on futures, because right now everyone is very interested in local trading, and we'll also show a little bit about spot trading. If you really want to see real profit and feel it, not just see it somewhere in a photo or in some random Telegram channels, then pay close attention to what you're about to hear. So, let's get started. So basically we're going to open a live stream right now, trading live 24/7. This is Bitcoin, Ethereum, altcoins. In other words, there are a huge number of different cryptocurrencies here. You can choose whichever you want, but mainly you should focus on Bitcoin. So you get what I mean, right? Now, I'm going to move this stream from the right side over to the Tradingview chart, which is basically the tool all traders use. All right. Our algorithm, which is called Intellect City version 49.82 at the time of this video. I don't know what the version will be by the time you watch. Maybe it will be different or maybe the same, but for now, this is it. It's very stable and good. In this code, I'll show you about how many lines there are right now. There are 3,300 lines, so it's a huge algorithm that really deserves attention, both from a programmer's perspective and for all developers. It's a very powerful algorithm, I can tell you, and it took a long time to develop. This is the algorithm we use for trading. Our entire team, which trades on the 24/7 live stream, does most of the trading based on this algorithm. So now I'm going to explain what this algorithm is and how it actually works. The main idea behind this algorithm is that it consists of different components, all of which are indexed, and channels everything into a single direction, meaning into numbers, so it becomes easier to understand what's happening in the market. Everything is just in numbers. Because when there are a lot of tools, it's hard to keep track of each one. This tool actually has several other tools built into it, where the algorithm processes everything and displays specific data. So let's start with the first one. There's something called the RSI index. Everyone already knows what RSI is. A lot of people use it. There's also stochastic, accelerator, Williams, percent rank, MFI, MACD, and Japan trade. Most likely you've heard these terms and these algorithms many times and know how they work. So at this very moment, all these advanced top algorithms are being actively used in the dynamic stock market, the volatile crypto market, various digital cryptocurrencies, and so on and so forth. That is It calculates the average value of all the indicators from each of the best algorithmic indicators that exist in the world and are used by millions of people. For example, millions of people use RSI, millions use stochastic, millions use Williams, percent rank, CCI, MACD, Japan trade, and so on. But the thing is, each algorithm shows at a certain point that this one will go here, that one will go there, and so on. So to avoid scatter, because it's hard when there are a lot of tools and you get scattered signals, it calculates the average value from all the indicators and shows you the data. For example, to put it simply, when it reaches 100%, the asset is overbought and you need to sell or short it and so on. When the value comes down to 1%, that's when you need to buy, go long, and so on. This works both on the local market, on any time frame, and on the global long-term market, but mainly we use it on the local market. So with all this, it is displayed on every bar. On each bar, it shows in numbers. For example, on the current bar. At this moment, 39% of all indicators reflect what is happening in the market right now. About 39 to 40%. You can see it here, right? And on every bar, it shows all the previous values that were there. At the same time, all these values are digital, specifically on each bar, and they are not redrawn at all. It's something like its own strategic algorithm where there are no redraws. So, for example, as soon as a bar closes, it keeps that specific value and moves on to the next bar. And this way, you get a certain kind of history, and from this history you can understand, for example, look, to put it briefly, there are various indicators like RSI, stochastic, all of these, the whole list, they are the best, they are top tier, these are the best that exist in the world, just so you understand. There are also hundreds of other different indicators which were taken from the stock market and brought over, refined over decades. You know, on Wall Street, everyone there uses exactly these indicators. And basically all the old-timers, all the veteran traders, they all use exactly these kinds of indicators. And this is the best indicator, it's a top indicator, these are the profitable indicators. They work both in the long term and the short term, both locally and globally. And if you understand that, for the most part, the crowd chooses, let's say, a direction. Someone is trading. A huge number of people, literally millions, use parabolic SAR, some use stochastic, and millions of people, mainly the old-timers, use these indicators. And just to avoid any confusion, let me repeat. It calculates the average value from all the best indicators. And all of this is built into a single indicator and displayed simply as numbers, making it easier to trade and understand what's happening in the market. Because all of them are scattered, you see what I mean? But there is an algorithm that gathers all the data from the best indicators and combines everything into one. You get it, right? And from that, you can understand what's happening in the market, use it as a basis, and make your trades, and good ones at that. And as our many years of experience show, and since we, as programmers, have been working on this for a long time, we sometimes can just see where the market is heading. And we enter different trades. This is shown on the stream, where you can see a live broadcast of all the trades. So we are constantly making good trades, give or take, but sometimes there are really great ones. Mostly they're good, because we wouldn't be doing this if we weren't successful at it. Now let's break down a bit what RSI, Stochastic Accelerator, Williams percent R, and MACD Japan Trade are, so we can understand what these indicators are, why the data is taken specifically from them, and why the algorithm calculates things the way it does. Let's ask AI now what it thinks about RSI in general. Well, maybe it can explain briefly. That would be interesting too. Can you briefly explain what RSI is? Just a general understanding, what it is, what the algorithm is like, and whether it's used in the stock market or the crypto market, and on which market it's used. In short, just explain it briefly.
RSI, or the Relative Strength Index, measures if an asset's price is overbought or oversold. RSI is an overbought indicator, kind of like a compass for prices. The algorithm takes the average gain and loss over 14 days. You divide one by the other, then use a formula with 100. Subtract the result from 100 and it's done. The number ranges from 0 to 100. Above 70 means it's overheated, expect a drop. Below 30 is a buying opportunity. In the stock market, yes, all traders love it. In crypto, from Bitcoin to meme coins. It's used everywhere. Basically, it's for those who don't want to fly blind.
Got it. Now explain what MACD is.
MACD is a trend indicator. It shows where the price is heading, up or down. It takes the difference between two moving averages, 12 and 26 periods, plus a signal line at 9. When the histogram rises, the bulls are in control. When it falls, the bears are roaring. In the stock market, it's everywhere, from New York to Tokyo.
Now tell me what stochastic is.
Stochastic is another overbought indicator, kind of like RSI, but it reacts faster. It looks at where the price is within the range of the last 14 candles. Close to the top means it's overheated. Close to the bottom means it's oversold. It gives you two numbers from 0 to 100. Above 80, the price might drop. Below 20, expect a bounce. People use it on exchanges in crypto. Everywhere there's volatility. It's a simple tool, but you'll never get bored with it.
Well, in general, the principle is clear, right? Like everything else, there's no point in breaking it down further. It's basically the same thing. The logic is the same. So look, all these algorithms, indicators that are used both on the stock market and everywhere else, they're the best indicators, the top indicators. And the real trick is this. The whole idea is actually very simple. If, for example, millions and millions of people simultaneously press the RSI button locally, it's logical, right, that the market will move in a certain direction. And at the same time, people are also pressing the button for the stochastic indicator. Again, millions and millions of traders, both the best and the worst, good and bad, but people are pressing that button and taking certain actions, causing some price movement. People are just pressing one button based on some indicator. You get it, right? There's also MACD, there's also stochastic, RSI, accelerator, Williams, percent trend, MFI, MACD, Japan trade. There are a lot of them. There are even more, but we picked only the very best ones. And so we thought, from a programming system perspective, if they show certain movements, certain entry points, certain exit points, reversals, long, short, why not use all this data? Combine it all into one whole so there's no variety, but rather an average value is calculated from all the indicators and displayed in a single algorithm, allowing you to understand things more clearly than with any individual indicator and to see the whole picture. You get it, right? That's exactly what we did. As soon as we get certain values, an average from all the best indicators, we get an algorithm that works really well. It's actually very interesting. This is the English version, and this is another one. Basically, it's the same thing. Just one is on one time frame, the other is on another. It works on different time frames. For example, let's take ADA. There are other altcoins too. We transfer and look at them, check what data they show on different altcoins, just scrolling through sometimes. I'll also show you that we have a bot that displays all this data in a specific screener. It also works for overbought and oversold conditions of certain algorithms, but that's something different. We'll get to it a bit later. And basically, I want to show how it works, so it's clear. Let's switch to 5.5 and go. No, let's do 10 then. So, as you can see, it really works as intended. It displays all these numbers. They don't repaint, and it just leaves them as they are, which is very important. For example, we can see that as soon as something is oversold, the price goes up, and as soon as something is overbought, the price drops. Basically, it catches these specific moments. We watch for them and we profit from it. Look, for instance, if I stop it, if you, for example, set up this algorithm or indicator, you don't need to configure it. The way you launch it is the way it works from then on. Of course, you can go into the settings if you want. You can go in there, check things out, delete a table if you want, or add this table or that one. Just look for the table by name and add it with a check mark. There's nothing special about it. Basically, you don't need to configure it at all. Personally, I don't even use this table myself because for manual trading, it's not necessary. The most important thing is here, meaning which language you're using. And that's it. So mainly, we choose values like around 90 to 95 for overbought and for selling. If it's for buying or on the lows, then the numbers are about 10 to 7, something like that. It happens very rarely, but it does happen. And in addition to all this, that is, you wait, for example, for values from 5 to 1 if you're buying. This is very, very rare. If it's from 95 to 100, that's also very rare. So the approximate numbers are 90 to 95, and for buying, it's about 10 to 7, something like that. Actually, it's best to go to the website. Intellecta. City, go to the website and read the description. There, everything is explained in full detail, including the formula itself, which percentages are best, and the best way to use it. There are also tips here, like which time frame to choose and so on and so forth. There's a lot of interesting information, and it's all laid out in writing, because people often ask which percentage is best and where. So, In short, if you want a quick answer in a video, again I repeat, it's best to read it. Read it and roughly calculate for yourself. But if you want it short and in a video, as I said, 90 to 95 is a really good value and it works on any time frame, absolutely. And if you're buying, then it's from 10 to 7, maybe even 5. But that's very rare. These numbers come up all the time. We keep catching them going long or short, and it results in good profits. Even better, and this is a life hack we've noticed very often, is to combine time frames. For example, combine the 2-hour time frame with the daily, and if possible the 3-day time frame as well. So if at the same time it shows overbought or oversold conditions across all those time frames, there's a high probability of a reversal in a certain direction, depending on the numbers, whether they're indicating overbought or oversold, or vice versa, whether they're indicating oversold or overbought. There's also a table on the right side that shows all the time frames and all the values across the different time frames. So there are time frames for scalping, time frames for intraday trading, time frames for swing trading, and then there are time frames for holding. Those are the larger time frames. Basically, most people use intraday, and those who trade long-term use swing trading. So it varies. This table shows all the time frames you need for trading, so you can understand what's what. You need to combine them, and so whichever time frame you're currently trading on, let's say the 30-minute, I'd actually recommend the 2-hour or even the 4-hour, and to combine that time frame with others. For example, if everything is green, that already indicates that the market is kind of overheated, and if it's oversold, you should buy. If everything is red, then the market is overbought and you should sell. So all the values, all the numbers here are the same numbers. Here it shows the data for the current time frame you're on, and here all the values are shown for all the different time frames, starting from 1 minute, 2 minute, 3 minute, 5 minute, 15 minute, 20 minute, 30 minute, 45 minute, 1 hour, 2 hour, 4 hour, daily, and so on. Depending on which time frames you need here, you can set all of them manually. This table also works as a separate tool as part of the whole set of other algorithms. It's actually very helpful. You look at it and you can clearly see what's happening in the market. It's the same thing during the live broadcast itself. You can join the stream and watch exactly what's happening in the market using this table. So it's very easy and interesting. And you can understand what's going on overall. For example, if you don't need the full table and only need certain time frames, you can go into the settings of this algorithm. Let me show you where to find it now. First, look for the inside index. Here it is, the inside index, and then proceed to enable the multi-time frame option. You can also remove the table if you find that you absolutely do not need it. Now the system will diligently load, and on the right side of your screen, you will clearly see the various time frames you can easily select as needed. For example, 1 minute, 2 minutes, or even 3 minutes are typically set by default, but you also have the flexibility to choose 6 minutes, 60 minutes, say that's essentially an hourly chart, or 120 minutes for what would be a 2-hour chart. If you specifically desire a daily time frame, please pay close attention to the detailed description provided here. Simply type 1D and it will then prominently display the time frames you've carefully selected. This feature is incredibly convenient when you only need a few parallel time frames nearby, just to quickly glance at them while you are comfortably staying on your main primary time frame. For instance, it's now showing 60 minutes, so you can immediately see precisely what's happening right now in the market. On the 120-minute, the 2-hour chart. In other words, these are the same time frames as in the large table. You can also add the large table, but here they function as separate indicators, and you get more advanced features. But generally, you'll mostly use just one. You can also enable or disable this algorithm separately, or turn on the main algorithm. This is the inside index in percentages with nothing extra. For example, you can have everything together, or this one separately. It's also provided separately so you can focus only on this algorithm. That's what we mainly use, but it's preferable, of course, to look at everything together. Still, you have the option to use it separately. Here too, you can enable the time frame. Just go into the multi-time frame settings, and on the right side you'll see the main options. 2-hour, 4-hour, that's 240 minutes, daily, and if needed, a 15-minute or 30-minute chart depending on your preference. The table here has one more cell because in the largest algorithm there's a limitation due to its size. It's a huge algorithm and there are certain restrictions for 3D as well. For example, with history, it only shows up to a certain bar. But if you enable the algorithm separately, the same one, just the inside index on its own, it will show more historical data. So there are some nuances. In the large algorithm, it shows history up to a certain bar, but if you need more, it's better to use the separate algorithm, and you'll get more history. Honestly, the amount of history in the main algorithm is usually enough. You just need to look at a few previous bars, and that's it. These are just features to help you understand how everything works. Next, we have... There are also sophisticated algorithms built in, for example, the well-known Fibonacci sequence. A significant number of experienced traders frequently utilize Fibonacci. They employ it consistently all the time. I personally know many individuals, including acquaintances, close friends, and even professional programmers who exclusively rely on nothing but Fibonacci, solely that particular method. Well, and of course they use these algorithms too, but specifically Fibonacci works really well. It performs well. For example, you can draw it manually, right? For those who don't know how to draw it, this can really help a lot. But in general, we choose and so on. Locally and all the way down to the current price, meaning it shows how far the bounce will go and up to which levels it might reach. Usually it goes to 0.618 or 1.618. So depending on who's looking at it, people do it differently, but mostly it targets these specific levels. This algorithm, you don't need to draw everything manually, it works automatically by itself. There are free Fibonacci tools on the internet, but they're all clunky and we've improved ours. This particular Fibonacci works absolutely perfectly. Everyone who has tested it said, yes, this is a really cool Fibonacci tool. It shows exactly where it needs to. For example, let's say here we've fast forwarded, I don't know, it doesn't matter. Let's say we draw it from the bottom to the top, and if we click, it should go up, and that's exactly what happened. It went up. So basically, we understand that Fibonacci works too. It's an excellent algorithm that you need to watch and use in your trading as well. So Jarvis, tell us about Fibonacci. What is it anyway? It's interesting, just briefly.
Oh, Fibonacci, that's pure number magic. Look, it's a sequence where each next number is the sum of the two previous ones, like 1, 1, 2, 3, 5, 8. And then there are the proportions. The golden ratio, 63%, 38, 21. It's magic in trading. Price retracement levels, where the market bounces as if by sheet music. It's an algorithm. You just draw lines on the chart, bam, and the trend is predicted. It works on stocks, crypto, forex, everywhere. It's like nature itself is giving us a wink. I love this thing. Gives me goosebumps.
So let's talk about it. Fibonacci is a mathematical sequence of numbers, where each subsequent number is the sum of the two previous ones. That's clear. This sequence has many applications, from mathematics and art to finance and programming, and it's connected to the golden ratio. These days, it's used very often, especially in trading, and the key term here is the golden ratio. You can look it up online to see what the golden ratio is, but it's a specific number and it's used in various ways. For example, 0.618, this is the golden ratio. There's also 1.618 and so on, depending on which local market you're looking at. In mathematics, that's how it works. Take a look to see what and how. It's as if this number has some kind of magical quality. Everything is always drawn to it. No matter how you look at it, it's everywhere. No one truly knows precisely why. But if you carefully read through the extensive documentation about the Fibonacci sequence and virtually everything else, it consistently comes back to this particular number, to this significant value. Whether it's a correction or something else. So it's exactly like that's just how it is, and if statistically it always ends up there, then as they say, we set our target at that point and watch to see if it actually gets there. This should also be taken into account, and it's important to understand that Fibonacci is actually a great tool. A lot of people use it, and as I said, the point is that it's applied in mathematics, programming, finance, trading, cryptocurrencies, and so on and so forth. The essential point is, if millions of active traders all press a certain designated button and are waiting for that specific number, then most likely the market price will indeed reach it, simply because so many people are actively using this particular approach. And since for us this is all automatically drawn out, clearly showing exactly what and precisely how, and we can readily see where it will ultimately go, we also observe this automatically. That means the price will probably reach that level, and we also use this as a small reference point so we can know in advance where the price might go and benefit from it. At the same time, you don't need to draw Fibonacci levels manually. For example, if you go from bottom to top, that's SATA L2 quietly, meaning you can see how far it might go to the golden ratio according to Fibonacci. Here is the golden ratio, here is the gold, if you were to draw it manually, but you don't need to do that. The system draws everything automatically and shows where the price might go. So we partially use this value to understand where the price could move, and it happens automatically. Honestly, it's really cool when everything's automated. There's also this algorithm which identifies liquidity zones. So the green band here is a liquidity zone for buying. The purple zone is a zone for selling. You can trade it and it's fully automatic. It draws itself, calculates itself. You can use it for both local and global trading. For example, let's take the daily time frame. Here are the liquidity zones where people will most likely buy during a dip. And we understand that these are liquidity zones, and you can calculate it for both local and global trading. I'll also reiterate that it's fully automatic. You don't need to draw it or search for anything. It all happens automatically. Just activate the algorithm. There's absolutely no need to configure it. It's fully set up by default, having been fine-tuned for several years. Once activated, it will simply work. Of course, you can customize it further if you need different colors or other adjustments. You can delve into the settings and make changes. But otherwise, by default, once you switch it on, it's completely operational. There's also another built-in algorithm called ATR. So look, if you check the website, it appears like this. Essentially, there are specific lines where the price is highly likely to rebound. You have the peaks and the bottom indicators from which it bounces. This isn't Bollinger Bands. Bollinger isn't all that effective. This is a more intriguing algorithm that demonstrates a ping-pong effect where the price can jump and bounce off these lines. See, these lines, they actually have two algorithms integrated into one. So it's not two separate algorithms, but rather two algorithms embedded within a single line. One line and a second line. They act like two distinct levels. So what exactly does it calculate from? ATR, in short, stands for average true range, which means average range. And additionally, an EMA is built in, which is the exponential moving average. Many people are already familiar with moving averages. In essence, there are two algorithms integrated that a lot of traders use consistently. And together they indicate specific movements. It's like a kind of trend, showing that if the price reaches this point, it will most likely diverge slightly from its true value. This algorithm itself helps to identify moments when the price significantly deviates from the trend. So it's like catching a particular wave and realizing that the price here is already oversold. If it touches the upper part, the price is also, so to speak, overbought. So you can essentially use this algorithm like a ping pong game, roughly speaking. Additionally, for those who trade globally, for example, on a daily time frame, it's built in based on this algorithm, which also comes as a package. This is for spot trading, but more on that later. So the ATR algorithm itself is also built in here, shown like this. But in addition to all that, there's also DMA, which stands for displace moving average. Let me just double check displace moving average. That's it. To be more precise, this is that line. There's one and a second one. So let me turn it off now. It's all built in here. I'll turn it on separately so it's clear. Here it is, the DMA itself. It shows up like this. DMA is based on the exponential moving average, EMA, or simply SMA, so you can switch between EMA and SMA. Well, it helps traders find key support and resistance zones. That is where the price can bounce or break through. For example, it finds peaks and troughs in the trend. There's ATL and ATH. ATL is the lows, ATH is the highs. So it can essentially show the peak or the bottom within cycles. For instance, if you're trading on a daily time frame, we recommend trading it on the daily because it's more geared towards the long term. So some people also enable it for local trading, but for local trading, it's better to use these lines, which are ATR, since everyone now wants futures trading, local profitable trading, more locally on the 2-hour, 30-minute, 15-minute. Well, in general, everyone is interested in local trading. So let's go back to profitable local trading. let's move on to the auxiliary algorithms. So here we have these lines which represent tunnel trading. Many traders, those who trade using lines, they construct a tunnel, set it up, and then start trading it like ping pong. So it's more focused on local peaks and local lows, ATH, ATL. So you can also trade well using the tunnel itself. When you see, for example, a flag, there's a pattern called a flag. So for those who know a typical flag, for instance, like this, it comes in different forms. There's a bearish flag, there's a bullish flag, for example, like this. And people usually trade based on it, like ping pong, they trade. So instead of drawing all these tunnels, the tunnel is drawn automatically, and many people trade specifically using this tunnel. Some are drawn in real time, it draws itself. There are also auxiliary ones, like this green one, you see? There are also periods when the tunnel is above, and it finds that too. You see, 1 and 2. So this is a tunnel that people also trade with. There's this one, which it also draws. So all the tunnels that exist, it completely identifies all of them. It tells you there's a bearish tunnel, there's a bullish tunnel. You see the red one? So people also trade based on that. And it draws them as an aid and shows what's currently happening in the market if you're trading with the tunnel. This is also a good algorithm that helps people, where you can earn a decent amount even just by following the tunnel. So you find a tunnel and trade based on it. Here on the website it's more visible. I don't know if it was visible there or not, but here it's more or less shown, you see? So there's a bullish tunnel, there's a gray one that's in real time, there's also a bullish one, green if you can see it here, red. So it shows them differently, these small, large and current ones. So many traders use this to decide when to sell or buy, whether to go long or short. So many such indicators are built in and you can understand based on them. So it's not just one indicator, there are several here, all possible ones, and they will show all the indicators that exist. This is actually a very interesting algorithm. It's simple, well, how simple? It's complex, but it helps. It helps traders make decisions. Okay, now let's talk about bear and bull. This table on the right shows the values of several algorithms combined. So, you don't really need to look at the table, it's off by default, but you need to look at the bars themselves, where bear and bull are shown. That is bear and bull. This is a trend that shows based on certain algorithms. This is how it looks if you turn everything off. Turn everything off here. On the website, it's shown in principle here. You see, right? These are signal trend moments, which are calculated not from one algorithm, but from traditional Fibonacci, Camarilla and Woody. So it all jointly calculates the average and shows what the current market is truly like. You can view this comprehensive analysis on the 4-hour, 2-hour, daily, 15-minute or indeed any preferred time frame. Preferably the higher the time frame, the better, especially for understanding the long-term trends, so to speak. So it clearly shows that the market is currently bullish, meaning it's consistently going up. So it meticulously calculates from these various algorithms, all combined into one cohesive system, and then displays a single unified signal. So this is not a specific buy or sell signal in itself, rather it primarily shows the prevailing trend. If it indicates 3, 2 or 1 or even 4 bear values here, meaning a significant bear market, then most likely you should be cautious. Based on these sophisticated algorithms, that there will be, for example, a clearly bearish market sentiment now, and everything will indeed shift towards a bearish market. If it shows bull from all these combined and carefully analyzed values, meaning a strong bull market, then here it will prominently show bull, meaning 3 or even 4 significant values. So like 4 out of 3 or 3 out of 4. The absolute maximum value here is 4, as we have 4 distinct algorithms meticulously built into one comprehensive system, and it shows each individually. In each bar, it clearly shows bear 4, you see, right? So 4 distinct values. It showed that the overall sentiment is indeed bearish now 4 powerful algorithms simultaneously confirming this. So here it showed 4, here 4, and you can clearly see, right, there was a bit of a noticeable drop. All good. We already know there will be a significant drop based on these crucial values. There are also neutral ones, of course. If all 4 are neutral, well, that's usually indicative of a flat market condition. So it's much better, as I previously said, to enable the tunnel trade feature and actively trade based on its valuable insights. Well, mostly it consistently shows 3 or 4 bearish algorithms, or rather 3 or 4 bearish algorithms, or 3 or 4 bullish algorithms simultaneously. And you can precisely understand where the price will ultimately go based on the prevailing trend. So, it's even thoughtfully built into the spot trading system. You can easily enable it and carefully observe its performance there. It's an interesting feature, very interesting in fact, because it uses massive algorithms to show what it indicates. And it's designed to show everything together, not just individual indicators. And it's convenient because it shows 4 algorithms simultaneously on one candle. So if all 4 indicate bear, then there will be a dip. It's a really interesting tool actually. We use it and check it very often. But you need to look at everything combined. If everything points to one side, then you should go in the direction that everything indicates simultaneously. If it says go there, then go there. If it says go here, then go here. So you need to look at everything simultaneously. It's complex, but it becomes easy once you constantly look at the chart. You go in, and the whole picture just forms for you. It takes some time to get used to it, and then it will work. This is about the trend indicator, the most effective of all available ones. And all of them are built into the main algorithm for spot trading on the daily time frame. As many as 32 different algorithms are built in here. That is technical, index, oscillators and EMAs all combined. These values are shown on each bar here indicating bull, which means a bullish sentiment. And on the bottom right or in the table itself, all the available algorithms are shown. So if you look here, where is it? 32, that's for the local one. And there's also for the global one, that's 32 indicators, algorithms, all together. Here's such a list. These are built in traditional, Fibonacci, Camarilla, Woody. There are oscillators like these, a huge number of them, including momentum, MACD, and so on. There are EMA and SMA, moving averages, all of them. Additionally, there's Ichimoku, ALMA, HMA, so many things and everything that exists. Here's the list of all algorithms built into one. So this is a massive algorithm that is built into a massive algorithm for spot trading, and where you can globally see what's happening with the market. So if all these algorithms indicate a certain structure, that we have a bullish sentiment, then most likely we will go bullish. If it indicates a bearish sentiment, then we will go bearish. So this is a trend-based algorithm. It includes all the others, technical indicators, oscillators, and moving averages, including internal ones, all the moving averages that exist. So a lot is built into one, showing the market sentiment, what the current sentiment is. And it's a very good, powerful algorithm, truly powerful. Sometimes it's better to check and see the sentiment before making a decision. It's available for both global and local use. But for local trading, only fewer technical indicators are built in because everything else would create too many algorithms and too much, noise. There's just far too much of it for effective local trade. For successful local trade, it is generally best to utilize technical indicators, and these are indeed built in that particular way, specifically designed for such purposes. So this algorithm, with these built-in algorithms, shows the trend sentiment according to technical algorithms in certain bars, not every bar, but at specific moments. Also, it's important that the spot algorithm, which has a lot built into it, works cyclically, processes and outputs data. This algorithm itself is strategic. So here's the data. Only 5 trades, 80% profit. You can check the settings. For those interested, I'll even show you the settings. We had a competition for programmers to see if they could surpass these metrics. No one, absolutely no single individual, could possibly achieve that. We proactively offered a substantial and enticing reward, a significant incentive, for anyone who could successfully beat these meticulously established performance metrics across various prominent online forums and specialized communities. Well, since absolutely no one managed to accomplish that challenging feat, that outcome is indeed incredibly great and highly significant for us. Then I really wanted to show you precisely how many actual lines of code are truly in this particular project. This code has about 1,800 lines. So this is a truly colossal, indeed a very huge amount of data or processing power. And it is a truly massive and complex algorithm that is being utilized here. And in the local one has even more lines, just so you understand. I'll show you now how many lines. 3,300 lines, just so you understand. So that's even more. This is just the code for the local one, you see? So both algorithms are colossal, and by combining them, a crazy, as they say, algorithm resulted in the end. It would seem right that the global code, suitable for spot or long-term, even for long-term futures, he is suitable for the long-term. It would seem right that the global code has fewer lines than the local one. And do you know why? Because everyone is mainly interested in local trade, and the main emphasis was placed precisely on local trading. I think that every self-respecting trader should have such algorithms as an auxiliary tool or as a main tool. If a person wants, for example, to buy cars, dachas, see everything in advance, and so on and so forth, good clothes, food, everything else, we understand that all of this costs money, and you need to get this information somewhere. And here, exactly such information exists, created for this purpose, which has been accurate for many, many years, and which we personally use. So we're not trying to sell it to you or anything. I'm just saying that I think every self-respecting trader should have such tools, whether auxiliary or primary. And from this, you can build and get good profit. And now for the most interesting and delicious part, actually, it's a drum roll. Liquidation map. This is the most interesting thing that can be found in the entire market. Now, so, of course, this is all interesting, but I need to grab a bite to eat because, man, I see this video is going to be long. I need to order something. Maybe some tea, all that, or order something. Or maybe some sausages, a sandwich with tea with cheese, or boil some dumplings. The only real problem in all this trading, even programming, is that there's never enough time for proper food, always just snacks. The only downside. I'll probably order something. Jarvis, order some sushi or something tasty. Your choice.
Oh, okay. Listen, if I'm going to order, let's get straight to business. No compromises. We'll take California with crab and avocado. Perfect balance. Juicy, not boring. Let's add unagi, eel and sweet sauce. And Philadelphia smoked salmon. Cream cheese, a little dill on top. It's a classic like jazz. And tiger rolls, tiger prawns. Fried, crunchy like life. That's it, 3 portions, expect them in 35 minutes. The courier is already on the way. He grabbed the napkins. Ready?
Yes, thank you, order it. I'm waiting. Oh, they've arrived. That's good. Let's check out your sushi. Bon appetit, everyone. I think you'll also order something for yourselves or something yummy, yummy, yummy for sure. Yes, the video is dense. I need to rest a bit. So the liquidation map, what else do we have? We also have a spot algorithm. Well, that's another thing. Then, so look, the liquidation map, what is the theory behind the liquidation map? So there is an MM, a market maker, who drives the price of any asset wherever they want it to go. This theory, in fact, is working because there is a lot of evidence. And to simply assume that if there are futures and spot trading, then everyone mainly chases futures to quickly make money locally and even globally. And for the MM, the market maker, if they truly own and control this particular exchange, it's often more than enough to effectively push the price directly towards the largest and most significant cluster of liquidations. When individual traders open many different and varied positions, each and every one of these positions inherently has its own specific liquidation point. And where there's a large accumulation of liquidations in one spot, it's easy for the MM to drive the price there and take the money. So the exchange usually wins. This isn't spot trading where you buy Bitcoin, for instance, altcoins, and just wait for a rise. They can't control the price exactly where they want it. Here the crowd mostly dictates the price. And of course, with altcoins, there are also nuances in spot trading. That's clear. But generally, when looking at Bitcoin or other major coins, it's hard for the MM to manipulate the spot price to those specific liquidation points. Even if they push the price down, it's still an entry point. You buy coins, hold them somewhere, and that's it. But on futures, with leverage, the higher the leverage, the more money, of course, but also more risks. And liquidations happen in places where there's mostly no margin. If a trader has ample margin, their liquidation point is lower. If they have little margin, their liquidation point becomes standard. The MM, the market maker, sees all of this, where the main concentration of liquidations lies. It's very easy for them to push the price down or up locally. So locally, they're in charge. And the theory is that the MM controls the price locally. That's 100%. Everyone knows that already. Now look, the liquidation map itself shows the points with the highest number of liquidations. That is from 100x leverage down to 5x. So there's 100x, 50x, 25x, 20x, 10x, 5x. It shows exactly those points where, well, a specific liquidation point exists. So Tradingview itself released interesting updates. This wasn't available before. This wasn't very recent in principle. Well, not that recent, but at a specific time. It released updates that allow pulling data from various exchanges. It transmits the data and the algorithm processes it. And as a result, such a map was created where you can see the liquidation points. It calculates and shows where liquidations are. So for example, look, we have 100x here. Look here, here's 100x. So here X100, where the points are, where mostly if the price comes here, a huge number of traders will face liquidation. You get it, right? There was a recent sharp drop. Remember that harsh one, which liquidated many people. It liquidated so much that it even took out X10, X5 leverage from traders with minimal risk management. And it even managed to take them out specifically, we understand, and only the exchange profited from this. Now look, it shows points where there are liquidations. That is, in simple and quick terms, you need to look at the areas with the most liquidations. So for example, if you carefully look at the previous period, we had significant liquidations here, here, and it absolutely took everything that was present there. This entire section, every single part of it. These are all the liquidations that people had meticulously set, and it completely took everything, leaving nothing behind here. It simply took a huge amount of money for itself. For instance, right now, after all that, we actually have it right here in this very spot, where even more can be taken. So look, if we assume logically, what will the MM do next? If there are as many liquidations as possible here, right? You see, and plus all of this. This hasn't been liquidated yet. So if we assume based on this liquidation map, then most likely the price will be pushed up. It will take what's above, then possibly drop it. But once the period comes when it takes this liquidation, new information will appear. New, and there will be a new liquidation map. That is, it updates every time. And from this, we can calmly approximately get profit and see where the MM can drop the price. We understand, right? Regarding the time frame. So, for example, look, there's a 30-minute, and it's best recommended specifically on Tradingview. They have such a complex system. It's always best to look at the 30-minute time frame because the 30-minute they have such a complex algorithm. I'll explain it again now. It's better to read the description, of course, here which time frame is preferred. So it's recommended to use the 30-minute time frame because on Tradingview it takes data from a 1-week time frame. You can also use other time frames, but it's like that. So they have this algorithm. Exchange data for 24 hours on Tradingview, that's a 5-minute time frame. Got it? Exchange data for 1 week on Tradingview, that's a 30-minute time frame. So essentially, if we take the 30-minute time frame, it pulls data all the way from the weekly time frame, meaning it's dense, a lot of data. Exchange data for 1 month on Tradingview, that's a 2-hour time frame. Exchange data for 1 year on Tradingview, that's a 1-day time frame. So generally, it's preferable and recommended to use 1 week, meaning the weekly data, and that translates to a 30-minute time frame on Tradingview. Or to put it more simply, just use the 30-minute time frame. It has the best information overall. So all the information is there. Well, they have such a complex algorithm, and it's best to use the 30-minute time frame. So look, you can check the history to see how it all played out. That's also interesting. But generally, the main idea is just to look at where the density is, specifically all these yellow labels. That's all X100. That's X100 leverage, because people mostly, well, a lot of traders, they want to make money quickly, get cash fast, and the market maker sees all this and takes advantage of it, spotting their liquidation levels and prices, and just pushes the price there. You get it, right? Well, maybe he just felt like dropping the price recently, or maybe someone else did. No one knows for sure. But if you assume he even took out the times 5, times 10 leverage positions, at that moment there were 10 times leverage positions here, where simply, well, basically well, it's impossible, but he just went and took it. You get it, right? So you also need to keep an eye on the 10 times and 5 times leverage positions. But since that's very rare, yes, it's mostly better to look at it as a recommendation from the rhythm itself and how it works. It's always better to pay attention to the yellow spots where it's 100 times or 50 times. Those are the most attractive, and the price is constantly moving. It goes exactly in the direction where the fastest money is. He also likes money and wants to earn quickly from all this, so it's recommended to watch the 100 times and 50 times. For example, in Telegram, we wrote about a certain moment, a video, 2 short little videos where the price was different and how it played out. So now we will be looking through the eyes of the market maker, calculating the liquidation map, how it worked for me at that time. I said it here, showed the video to everyone. By the way, join the Telegram, subscribe. The link is in the description. You'll also be in the know. When we were developing this liquidation map, here it is, there was a video showing how it worked. So let's think about it. Let's look through the eyes of the market maker. And after that, there was a video showing how it all actually played out. That is just as it was described in that video. After that, that's exactly what happened, live and openly for subscribers and everyone else. So let's take a quick crash course from Budi & Co. about the new liquidation map. Everyone is already talking about it. Some are testing it. Others have their own theories. Let's see how we observe the situation. Earlier on the 8th, actually on the 7th, Trump said that there would be a reserve. He signed it, but there wouldn't be any purchases. So in fact, yes, everyone expected one thing, but something else happened. There's a bearish sentiment, but in the long run, this is great news since it's still a reserve. But for the local situation, it's not very good, right? Okay, now let's take a look. The crowd really did move down, as we can see, right? So all this movement is most likely caused by regular people, regular traders who made this move because of the bearish sentiment. And of course it makes sense that it should have been bearish, but in the long run this is great news considering what happened. Okay, now let's build on this news. So the sentiment is going down. Okay, liquidations are starting to pile up here, you see? That is right here, or rather they start here. And this is where the most liquidations happen. Okay, so what does the maker do? Let's imagine we're the maker and try to think like he does. Of course, the market maker theory is about 70% probability that he exists, you know? But most likely that's the case because as soon as cryptocurrency appeared on futures and derivatives, the market maker appeared as well, and most likely it's being managed. So We understand that wherever the price goes, there will be liquidations. That is a large number of liquidations. You get it. The algorithm shows that there are a lot of liquidations here. Fortunately, Tradingview provides good data, and we can use that to see that there's an accumulation of big liquidations here. So what do we see? We see the following. This movement is the crowd, most likely. The maker pushed the price up, the crowd pushed it down again, the maker pushed it up again, he pushed it up again and again. Maybe he was just shaking people out here. Okay, now what do we see? We see that the maker wants to mess with people here as much as possible, so that as many liquidations as possible accumulate here. Okay, why is he doing this? Let me explain. As soon as the price drops, liquidations appear here. He could have just taken it out with a single candle and brought it right back. You get it, right? But he doesn't do that. What he always does, as we've noticed, is torment people for a long time, over and over, just keeps tormenting them. And here, a large number of liquidations are already accumulating. You get it, right? He keeps tormenting. Right here, a large number of liquidations are accumulating. You get it, right? He can even do the following. He can push the price even lower, not for nothing, right? We look at what kind of support we have there. He can push it down here, or he can push it down here. You get it, right? So this is already 77 to 79. In the end, there will still be a very large number of new liquidation positions. So we understand that there is a huge amount of liquidation here, and it's impossible to predict the price in advance. But most likely, as a market maker, he always goes after the liquidations. Sooner or later, he will definitely come here. There's a huge amount. We've always observed this kind of situation. When the sentiment is short or long, sooner or later, after everyone has been squeezed out, he comes there and then always quickly takes the liquidation that the map shows, and then other indicators start to come from that. And then we already understand other sentiments, other news, other indicators, and so on and so forth. Basically, that was the whole crash course on how it will most likely play out. We don't know. Let's say it right away. Nobody knows, but at least we have some small percentage of understanding about how it might go. You get it, right? Sort of. And even here, look at the situation. He could have just taken a big candle right here. Why didn't he do that? Why didn't he just take the candle here? He could have just taken it and that's it. Why didn't he do that? Again, he wants to accumulate so that there are as many liquidations here as possible. You get it, right? And because of that, we can stay one step ahead. That's a little crash course from Gudik. Basically, thanks everyone. And then there will be the next video, also short and quick. Here, let's see how it played out. So, hi everyone, this is Gudik. I wanted to show you the previous video for some reason in this format, so there wouldn't be any editing. In the previous video, I showed how works. When it truly wants to collect its significant liquidation, remember I clearly drew here that the vast majority of the liquidations are concentrated right here in this specific area. It will inevitably take them whether it's sooner or later. Look closely, the prominent yellow line itself, this particular one right here, that's precisely it. Let's meticulously mark it, because this is exactly where the most substantial liquidations are located. When there's a really big short position, it usually collects a very significant liquidation afterward, almost as a consequence. If you carefully look locally, it also collected at different moments in time, but primarily its main objective was to effectively trap people and then proceed to take the absolute biggest liquidation right here. I have distinctly marked it in yellow here for clarity. Even if the price happens to go further, it will still persistently try to collect a truly huge liquidation here somehow, in some manner. You could basically draw a truly massive liquidation here and then proceed to collect it. Remember, I explicitly said before that sooner or later it will undoubtedly come here anyway, without fail. Let me remove this. So as shown, according to the parameters from the liquidation map itself, where we see the and we'll be able to watch how it all happens. I'll move things around a bit. Alright, let's go, let's watch. I'll move it a little so it's clear, because I don't want this to be on the chart. I want it all to be in the video. Let the video show it so there's proof of all this. So, the chart moves, but we're looking a bit higher up. You get it, right? Like the orange line and how quickly it can get to where it needs to go. Collecting liquidations, and now it'll get there quickly. It's collected everything. So you see, it basically collected the main liquidation from everyone. You get it, right? It's actually an interesting situation how the MM works, and honestly, it's cool when we can watch and see how and what happens. And understand how it works. And then new data comes in, it gets updated every time with new data. Basically, you can draw the main line yourself, but then the data updates and you can watch what it wants to do next, what it wants next, where it wants to liquidate everyone. There you go, futures. This is what futures are, MM. We were just now seeing things through the eyes of the MM. And these are the kinds of futures. We have futures. We see that this line, this orange one, is this yellow line here. Just so you understand, in case you didn't get it, this here is this one. So basically, it quickly just swooped in and took all the liquidations. So you get it, right? This is what actually happened. So first I posted the chart and then some time passed. I wanted it to play out and to show it live, how it would behave. Because I said before that it would definitely come to this area. It's inevitable, and it did come, and there are actually a lot of such setups. An enormous number. Then as time passed, a huge number of people already noticed that the old price is now different, much different. So during this time we also updated this algorithm and added more data. Previously it would show at most just this part in the moment, but now it displays more data, more history, more information, in general, more and more. The algorithm has become bigger, but it's impossible to take a huge amount from previous data. Tradingview also has its own limitations, and if they release some new update, we will definitely update our algorithm, adjust it to their algorithm, and it will calculate everything completely. But for now, there are limitations, since Tradingview is also not an unlimited platform, and at every point, every line, it pulls a lot of data. There's a massive amount of data and all of it needs to be processed, so that's a limitation. But we've also made a new update. Before, it would show this as the maximum, but now it shows more. So that's great too. Now, about the liquidation map, you now understand it, you're much more, let's say, experienced. You now have an upgraded skill and you can use it to see well where the price will go. There's also a theory, let me turn on CoinMarketCap. There's a theory that, for example, the owners of various coins, and there are a huge number of them as we know, right? Just how many are there? In general, there are just so many. So the theory is that, for example, if the owners themselves hold their own tokens, what do? They take their tokens, deposit them on exchanges and trade them there, all that stuff. What do? They typically dump their very own token, their proprietary coin, after having carefully set up futures positions, either short or long, but in most cases, most likely short. Because you may have noticed that whenever the price drops, it falls very quickly, very deeply and painfully, while when it rises, it doesn't go up as sharply as it falls. So, what can they do? They take their tokens, set up leveraged short positions beforehand, and then dump their own token or coin. You get it, right? And they make an insane amount of money from this. You can't even imagine how much. And it's basically legal. You can do this. So just imagine how many tokens, coins and projects out there could do the same thing. This is also a theory and you need to be aware of it and understand it. That's what a liquidation map is. So you can look at liquidations in this section separately, or the main algorithm itself already has this built in. It also shows it here. You can switch between different time frames and it will display there as well, both as a separate feature and as an internal one. Now let's get back to the main algorithm. You see these little dots here, right? They're different colors and there are a lot of them. These are various algorithms that are also built into the main algorithm. But I'll talk about them a bit later because they need to be shown alongside other algorithms. There's a whole setup there. Now let's talk a little about the strategic algorithm, which works for spot trading, but you can also use it for... This algorithm can be used both locally and globally. There's a lot built in here to let you monitor things on both a global and local scale. So if we're mostly trading locally, sometimes it's important to keep an eye on what's happening in the global market to understand the bigger picture. So there is a strategic algorithm, a strategic indicator, the best strategic indicator, which has proven itself over time, showing its effectiveness and strategy. It has no errors, and that's the main reason we use it and always keep an eye on it. We've been following it since 2018, for a long time, and in 2017 we even created our own portfolio based on it. This portfolio is tracked by our team, programmers, friends of friends, investors, and so on. A whole chain of people. This algorithm itself is strategic and shows just 5 trades, the best ones, with a profit rate of 80%. In other words, these are actually the very best results that any strategic indicators, or indeed any strategies or even any algorithms can possibly show, and so on. At one particular point in time, we even held a comprehensive competition on various online forums. I've actually already mentioned this, but I'll repeat it once more. We organized a contest so that programmers on various forums could try to outperform these results. We were ready to pay a good reward, but in the end, no one managed to beat it. So it turns out that this algorithm is really cool. It's just awesome. We started improving it further. It's partially available to the public. This is what it looks like. This is the free version that's publicly accessible. The percentage here is from a more updated version, which we don't share. So let's start with how it performed. Here it showed a buy signal. If you look closely, it really highlights those moments when the market is overbought or oversold. Here it signaled to sell. Here it signaled to buy. By the way, this video was recorded on our YouTube channel where we actually created this portfolio and so on. Here it signaled to sell. Here it signaled to buy, and as of now it hasn't signaled to sell yet. So we're waiting for it to tell us to sell in our portfolio. But since we've entered a bear market, these brown bands indicate the start of a bear market. This band marks the beginning of a bear market. Here's a brown band. Let me do it like this so it's visible. A brown band, that was a bear market. So brown band, here it is, that was a bear market. You can see it, right? And currently the brown band means we're already in a bear market. That is, it processes certain days, certain cycles, from which it shows what is happening in the market at the moment. There are 3 stages in total. The first stage is a bullish accumulation market, an accumulation phase. This is when accumulation is happening, but it is also considered a bullish market. Then comes the hash bull market, which is a hashed bull market. Why? Because there is also the halving. Everyone already knows what halving is. The reduction, the splitting of mining rewards. Anyone involved in mining understands this. And in general, pretty much everyone now understands what halving means. So there is a halving, and we see that always after the halving, since the mining reward is cut in half, there is always a hash bull market. That's what it's called. There is always growth after the halving. So here we see a halving, here we see another halving, and then there will be another and so on, all the way until 2140, when the last coin will be mined. After that, mining will still continue, but miners will only receive a percentage from transaction fees, meaning that the mining itself, the halving itself will end around the year 2140. So we see that halvings occur, then growth follows, then another halving, then more growth, and so on. There was a halving in 2024, and after that, growth follows. In other words, everything is cyclical, there are cycles. So let's start and break it down. First, we had a purchase. We are in the accumulation phase. This is also considered a bull market. Then comes the halving, a bullish hash market, the strongest one. We can see it. After that comes bear market, that is a bearish market, finds its peak. This is a strategic indicator, I repeat, because if it gives its signal once on the strategy, it never redraws. Absolutely never. So if it shows the signal once, that's it. It's forever. If it had shown something different and we didn't like it, we wouldn't use this algorithm, wouldn't create a portfolio, and wouldn't make speculative moves like selling at the very top or buying at the very bottom. That's the whole point, you see. We want to get as much profit as possible from this, and we understand where to buy and sell. Let's move on. It's said to buy, then comes the hash accumulator, the accumulation market, then comes the halving, the hash bull market. This is our powerful market after the halving. Then comes the decline, the bear market, we fall, and at the bottom it's said to buy. The accumulation market begins, you see, right? Let's move on. The halving has appeared again. It pushes the market further. So after the halving comes the bull market, the hash market after the halving. And now we've reached the stage of the bull market, that is the bear market. That is to say, considering the fact that we are not strictly relying on the algorithm, but we have indeed made such significant moves that the main part, we left approximately 80% of all fundamental core assets for the long-term investment horizon, since it hasn't yet clearly signaled to sell. However, since we fully understand that the opportune time for the bear market has indeed come, we have meticulously prepared such comprehensive actions that we sold off almost all the worst assets in our portfolio, kept only the best ones, and from the fundamentally strong assets, we sold 20% of all holdings. We kept 80% of the fundamental assets. And we will wait until it signals to sell. And then we will either enter or exit the market further, depending on the situation. So we've already made such a move that we now have this amount left in Tether USDT, just in case the market drops further, since we're already in a bear market, and we'll be buying more. This algorithm also includes a map, a liquidity map, support zones, which are marked in green if you can see. So, most likely, we will be buying in small amounts, little by little. Usually people do it this way. They buy a little here, 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 and here, or here, if the market keeps dropping. We'll do about the same, just a little at a time. If we see a significant dip, we'll start buying more aggressively. You get the idea, right? It shows us that the ATL, the all-time low, is at $48,000. But since we're a bit like programmers, we don't strictly follow a specific algorithm because it's not necessary to stick only to the algorithm. We also understand that there are countries switching to cryptocurrency, buying up major foundational coins, mainly Bitcoin. Everything else is speculative, even for countries, if it will switch, but mainly everyone is switching specifically to Bitcoin. So the main focus is on Bitcoin for us. Everything else is speculation. If there's a crash in the market, then basically this is just a personal opinion, the opinion of our circle of programmers. The price will be, we think, though we don't know for sure, let me repeat, it will be around $70,000. Given that there are ETFs and given that there are countries that will be buying, we understand that this won't happen as quickly as it might seem. Yes, they've already come up with and passed legislation there, and that's great. It's actually incredible news. And from this perspective, we want to emphasize that it won't drop too much, even if there is a downturn, if there is a bear market. So we'll be buying more somewhere in the range from about 70 down to 50. So if it drops to around 50, as the algorithm suggests, and I'll show why, then the range from 50 to 70 is an excellent entry point. If it does fall to 50, I think people who enter the market for the long term will be very lucky. Much more so than in previous cycles, because now countries are getting involved, and that's the main point. Countries are entering the market, and that's very important. So I don't think it will drop too much, but since we are already in a bear market, yes, and considering that the algorithm hasn't yet signaled to sell either. Right now it hasn't signaled to sell, and strategically it hasn't been wrong. The algorithm has excellent performance, which is why we use it. If, for example, it had signaled in the other direction, like to buy here, then we wouldn't use it anymore. It wouldn't be interesting to us. We're only interested in the most interesting, the very best strategic indicators. That's exactly what we're using. And we have a team of programmers who use it, constantly improving it, and everyone is thrilled with it. And the people who have been following us since as far back as 2017 are very wealthy now, and we congratulate them. So overall, everyone is satisfied. In other words, everyone is happy with the results. That is, many people can lock in their profits now, since they think a bear market is coming. Or maybe it won't happen, no one knows. We only rely on what the algorithms show, and from there we make our decisions, roughly understanding the situation. Yes, because we want to find the best entry points at the peaks and the best entry points at the bottoms. That's the most interesting part of this period. We'll keep buying as long as we can, and that's the amount we have left for that. But from all the rest, we've already locked in profits, 20%, even based on fundamentals. There's a video somewhere, I'll probably show it now. So here's the video. I recorded it about the old portfolio, what it used to look like, to show what assets we basically had, and we've pretty much sold all of that. Now it's somewhere around here. Here it is. So let's start from the top, and now it will scroll through. You'll be able to see. This is an old video clip and it shows what we've sold off. So we sold off all of these, some at a profit, some at a loss. That's just how it is. Now that's not interesting anymore. Here is the portfolio that remains, meaning there's nothing else. All the rest we sold off, whether they were at a loss, at break even, or with a good profit. We sold everything because we did not need it. We kept only the fundamental assets, but even the term fundamental is a bit flexible. For us, fundamentally, that's only Bitcoin and Ethereum. Everything else is speculative, meant for 1 or 2 cycles at most. The most fundamental assets are for several cycles. In the literal sense, even for retirement. I'll put it that way. That's how it will be allocated. Why? Because Bitcoin is considered fundamental. If countries are already adopting Bitcoin, it's clear, right? Everyone already knows about Bitcoin. We all know about it. We've all become smart about it. But back in 2007, in 2018, there were not even bloggers. There was no YouTube, no Telegram, just ICQ, old computers. And everything worked very slowly. So look, why do we consider Ethereum to be fundamental? Because it has such a protocol. It switched from proof of work to proof of stake, and now they can upgrade their protocol at any time, however they want. So, for example, if some competitor comes up with something new, Ethereum can implement it themselves. If something really hyped comes up, Ethereum will implement it for themselves and keep improving. And since the Bitcoin protocol doesn't change, it's clear, it's the old grandpa. And if countries are already adopting it, then it's clear that's the price of Bitcoin. Everything else, as I said, is speculation. We'll be selling, buying more, reselling. All of that is pure speculation. Just so you understand, in our portfolio, this is the first thing that a lot of people are watching. It's mostly programmers. We sit and discuss. Everyone has their own opinion, thinking about what's better or not. And there are friends who joined in 2018 and investors who buy for themselves, tracking a certain type of portfolio. We're all following this portfolio, and we make a copy ourselves, pretty much the same way as here. Everyone does it differently depending on their capabilities. Each person does it on their own, and we don't even know what investors have in their portfolios, where they keep their money. We simply don't know. To be clear, since we don't accept money, we don't have any channels, no courses, we don't take money for management. In other words, we don't do any of that. Honestly, it even annoys me, I'll tell you that. Well, it doesn't matter how others do it. Bloggers, that's their business. Now, let's keep going. So let me point out here that there's this algorithm which is more up to date, and the whole team, including the programmers, is keeping an eye on it. There's an older version as well, which we've also refined, and it was mainly shown a long time ago. It only indicated entry points at the top, at the ATH, that is the price peak. ATL is the price bottom. We made it freely available on the internet because we know that as programmers, sooner or later you would have stolen it anyway, so it's not really interesting to keep it private. Let people use it, as many as possible, the more the better. Now thousands and thousands of people are using it, and it's been out there on the internet since 2018, appearing on various services and websites. Everyone presents it a bit differently, and I see it's already been modified in some places. It's available in many places, and on the Tradingview platform itself, there are already hundreds of versions and thousands of people are using it. But it shows everyone the same entry points, specific ones. And as they say, millions and millions are already using this very algorithm strategically. And that's a good thing, because the more people enter at a specific entry point here, the more the price will really jump. And that's what happens next. The whole system will come into play. The system here is huge. Not just entry points based on the strategy, but also a lot of other different features like holdings. Of course, you can probably find holdings somewhere on the internet for free, but here everything is integrated, everything is displayed, it's all beautiful, convenient, and very well done. And this updated version is also included with all the other algorithms. So, let's recap our best strategy. What did we do? Once again, we sold off all the bad assets, kept the fundamental ones, and from those fundamental assets, we kept 80% and sold off 20%. The total amount from all the coins and projects ended up like this, and this is where we will buy more if there is a dip. And since I haven't mentioned yet that the strategic algorithm currently indicates a sell, we will wait. Maybe for the next cycle or some other period, meaning we'll have to be patient. And then we'll think about selling. And if there is a dip, we'll have funds ready to buy more. So you see, we basically win either way, whether the price goes down or up. Yes, we're prepared to ride out this bear market even if we're at a loss. Believe me, this isn't our first time. We've already sat through all these downturns, spent a lot of time thinking things over. It's all happened before. History always repeats itself in cycles. And we're ready for any scenario. That's why people appreciate us and why we've built such a large team of programmers. Everyone understands what's going on and what needs to be done. And people started joining us as early as 2017, then the team, friends, investors, and that's why they appreciate it, because they really gained something from this. Money, profit, money, a lot of it, you see, and all of us are only interested in big money. That's basically why people started to like us, the network's intelligence. Why? Because sometimes at certain moments we rarely release long videos like this, but there are moments, for example, when no one knew that at $3,200 the price would reach $100,000. There's a video about this. The very first one, it's short, but still it's about that. Later I told my own people about the algorithms and everything else. There was a moment, for example, when it was time to sell, or a moment when it was time to buy, when the market price after the halving was at $70,000 and then it dropped. People didn't know what to do, how or why. It was a tough decision. None of this existed yet, you see, so it was a difficult decision. But it was made, everyone agreed, and we went for it. And now we've come to another tough decision. Because there was a dip. You saw that recent dip. That's already kind of a warning sign, and maybe it won't go down any further, which would be great. In any case, our portfolio remains. We plan and calculate everything this way, using algorithms, a team of programmers, networks, projects, and all the rest. We calculate it all to determine the best possible scenario, what will happen, what's the best way to act, and so on. Plus, we also publish this so that people can join in and at least look at it, maybe apply it to their own situations, and it works out for them too. So we're really trying to do this for the community, our friends, our circle, and in a way it turns out we make some noise for the whole world too. We help out in certain situations, and that's why people appreciate us, because we release videos exactly when they're needed, when people really don't know what to do and everyone wants to make a profit. There's also a previous video before this one, I might put a link somewhere, where I go into more detail specifically about the spot portfolio, about what we did, what we're going to do in this cycle and everything else. Basically, here I showed everything briefly, but there the explanation is longer and covers all the other features like the death cross, golden cross, all those lines, everything about Fibonacci, where to look locally. You can check all that out too, and everything else about retracement, lower prices, how it's all calculated, why ATL, why the price is at the top, although, well, that's another topic. There's a lot of different stuff there, so you can check it out, but it's not really necessary because basically I've already explained everything here. But if you're specifically interested in the algorithm itself, how it works, what it's all about, or if there are any extra features that I might not have covered in this video, I'll probably be posting some more videos about those features later on, but that'll be in the future and they'll come out rarely. So if you're interested, there's another video where everything is shown and explained in more detail, specifically about spot trading. This video is more focused on local trading, which is what a lot of people are interested in, because everyone wants to trade quickly and locally right now, or at least within a week, or even within a day. Sometimes it can even be within an hour or two, it all varies. So this video is specifically dedicated to that topic. You can check it out. Again, I'll repeat, there's a free version here. Here are the links if anyone's interested. There's also a more updated version, and you should be aware of that. But mainly, let's get back to local trading and keep looking further. I'll tell you this. Whether it's programmers or just regular people, for us personally and intentionally, trading spot is much more convenient, stable, and honestly more interesting. Futures carry much bigger risks, but well, it depends on what people like. Statistics show that everyone wants to trade futures, but for us, in our environment, we prefer to trade spot, but that's more for the long term, and we all understand that. Of course, everyone wants quick results, but personally, we prefer and actually trade spot ourselves. And I have to say, none of this is financial advice. This is just my personal opinion, and I'm not giving any advice or recommendations. You make your own decisions and take responsibility for them yourself. You have your own head on your shoulders. That is, in the description, there's a disclaimer that we fully disclaim all responsibility and we refuse any liability. This is not an advertisement, this is not financial advice, and so on. You need to understand that. I have to say this in the video, and in the description there are full details about the disclaimer, and in the about section on all videos and on the channel, what's what. I absolutely have to say this. Basically here we only talk about what we do, and then it's up to you to decide at your own risk and all that. Our lawyers advise us to say a few words about all this. Actually, the main thing is the description or the about section. That's the most important. Everything is written there, you can read it. Now the most interesting part, I'll show you the theory that we follow specifically on a global scale. For example, let's take Cosmos. So this is considered layer 0, as in blockchains there are levels. First level, second, third, fourth. This is basically the 0 level, where other projects are built on this core, and then further projects are built on those projects. These are layers, layer 2, layer 3, and so on. So here's an interesting theory. Let me put it this way. For example, when a project launches, it's on the blockchain, and it's all really cool. What do they mostly do? Basically all these coins. And why there are so many of them now? It's because... Why is that? Look at what programmers do. They take and create some kind of fork. They take a cool project and make a fork of it. Skilled people do it like this. In fact, on their own, in their own language, they write a new project based on the fork they created. So all of this is done easily. Tons of stuff is downloaded from GitHub. Basically, all the source code is open and available. They download it, rework it, write it in their own languages and release a coin. But that's really for the skilled ones. But generally, I've noticed that everything is pretty standard, just like everyone else. They launch a coin on a blockchain, everything looks great, everything is cool. They say things like, when you bizarre, we have an Ethereum killer or something like that. They present it so well, people buy in and the price skyrockets. What do the owners of these projects do? They sell off their holdings and make billions from it. You get it, right? The price drops. I've also noticed that bloggers, well, I watch different bloggers. It's interesting to see different perspectives. I've noticed a trend. Everyone says the same thing. The owners themselves buy back these coins so that there will be growth later. In other words, everyone is hoping for an alt season and all that. Yes, I want an alt season too. I have some in my portfolio, or rather, we have some in our portfolio as well. And here's the thing. Look, when they sell off all their coins and make billions of dollars from it, the question is, why would they buy back their own tokens or coins? Well, coins on the blockchain. Why would they do that? It's easier for them to just create a new project. That's why we already have so many different projects and they're all on the blockchain. All so cool. All supposedly Ethereum killers or something else, or even Bitcoin killers. They create their own projects. In other words, there are more and more of them appearing. Have you noticed? They create their own and do the same thing. There's simply no point for them to buy back the same thing over and over, you see? So their own projects, I've noticed that everyone says they're going to buy back their own project, but it's all manipulation and everything else. No, guys, they don't buy back their own projects. It just floats around somewhere and there's some kind of distribution going on. In other words, it's just a small local trade and that's basically it. So you have to understand that all these altcoin projects, all of them, sooner or later, they're all going to fizzle out. And why is that? Because there are more and more of them. And why are there more of them? Because the logic is that it's easier for the owners of these projects to sell at some kind of peak, like after the halving or when everything is going up. They've already sold everything off, made billions from it, and then they just go on to create more projects, different ones. All sorts of DeFi projects, layer 1, layer 2. They've come up with so much stuff already, it's just crazy. In reality, if you notice, only the most interesting projects survive, meaning the most fundamental, robust ones. But sooner or later, if there are even more of these projects, and there will be more because the percentage, as I explained, is clear to them, it's just easy for them to fork some project. It's a piece of cake. But actually, it's hard to create a fork, or rather, to create a platform that's not just a copy of some cool project. You have to rework it, you need knowledge, a huge team, and a ton of investment and everything else. So it's actually difficult, but they still do it. and only the kinds of projects remain that, just like they were initially, are distributed unevenly, not specifically by some owner with a bunch of coins who allocates 100 to programmers, this much to investors, and that much to others. In reality, that's not how it works. They just take a huge piece of the pie for themselves, it's all theirs, and they do some kind of distribution, airdrops, sell it off. It's all nonsense. What they actually do is just make copies of themselves, and then under some catchy slogan or cool project or blockchain, everything else is just unnecessary, you see? And what I just want to the thought and sort of the theory I want to share is that this is exactly how it is, and sooner or later all these altcoins will just fade away. They won't exist anymore. Only the fundamental ones will remain, and that's it. You need to understand this. Look, there will be only 3 directions left. The first is the blockchain itself, which is basically Bitcoin, right? Which is immutable. That's one direction. The second direction is anonymity, which is Monero for us, and that's it. Everything else is nonsense for now. Monero is, as it stands, the only blockchain that is completely anonymous. The third is, and layer 0 in principle is interesting, but also not that interesting, because on layer 0 and other layer 1s, people don't really want to build. For example, let's say you create some kind of project, right, on some other platform, and you end up depending on that other platform, which isn't really that appealing. So the third direction is actually more interesting. It's layer 1. For example, Ethereum, but the kind of layer 1 that builds on itself. So let me clarify again. Layer 1 is Bitcoin, which is basically a blockchain with an immutable protocol. The second direction is anonymity, because the whole idea behind blockchain is, in principle, anonymity. And the third direction is a blockchain that builds itself, that evolves, updates, and constantly creates new things, borrowing the best ideas from everywhere and incorporating them. That's Ethereum, for example, and there really aren't any other directions. So you need to understand that in the entire crypto space, these are the main directions of cryptocurrency. Even on layer 1, in the third direction, you can create all sorts of projects, DeFi projects, memes, smart contracts, and everything else. You see, right? That protocol that updates itself. So we really need to understand what the directions are. This is something you should also grasp. Right now, honestly, it's crazy. The alt season is already underway, just so you know, and has been for a long time. But it's not happening the way people think. I'll show you now. It's not like that. So it's not just one direction where everything goes up, like in previous cycles. Altcoin season is happening now, but it's spread out across all these altcoins. There are thousands, tens of thousands of them, you see? In other words, it's already distributed among different projects across various projects, you get it? Well, I hope you're following my point. So, the altcoin season is already happening. It's been going on for a while, but it's not that everything is going up. Instead, it's distributed only among certain projects, that's all. And I also wanted to share this thought with you. At the time you're watching this video, I don't know when that will be, maybe a year from now, maybe this video will be a year or two old, I have no idea. So maybe by now there has already been a bear market or a bull market. So we'll see. What I'm getting at is that there are hypes. Basically, we're chasing hypes most of the time. So which ones? From the start, as a programmer, I can say, I know certain people who run projects, starting from the blockchain itself, how they rework things, they build things, they're in top-notch companies, and everything is beautiful for them. Silicon Valley, everything is great there, believe me. And from the very beginning of blockchain all the way to tokens, what's most interesting is that we catch these hypes out of all this and look at which hypes have happened. Let's take a look ourselves. So before, the hype was DeFi projects, and now, right now, the hype in 2020, 2025? The hype now is decentralized exchanges. Before that, the hype was around DeFi projects. Before that, it was about memes, smart contracts, and everything else. Before that, the hype was about platforms like Ethereum and so on and so forth. So basically, we're mainly catching the hype, watching the market direction, where it's going to go. And we write all of this in our Telegram channel. But you can also join there and check out what's going on. There's a lot of interesting stuff. Right now, we're mainly focusing on countries because we're interested in a more global perspective. Sometimes information slips through about where the hype is happening right now or where it's about to happen. Telegram is, of course, great for that. But the best thing is to be our partner. We look at people as something like... well, usually the standard is that if you have our algorithms, which I think every programmer and every trader should have because they're really cool. And you also automatically, in a way, become our partner to whom we can show certain things. But for now, we're showing everything. You are Telegram for everyone, so you should also understand this. In Telegram, you'll also find a link to a screener like this. We have an interesting thing, in short, a bot searches for various pumps and dumps using these algorithms. And it does this on exchanges like Binance, Bybit, OKX, Bitstamp, and Coinbase is also added, though it's not written here. It looks for interesting pumps and dumps of coins where there's an overbought or oversold situation, a sharp drop or a sharp rise, and it tells you, for example, that right now there's a pump happening. That is, the pump might end soon, possibly. I mean, it doesn't know for sure, obviously. These are just algorithms, they can't say for certain, but it picks out those moments where, like, look, there might be a reversal soon, or look, there's about to be a reversal from below or above, or the pump is ending, or the dump is ending. So it's kind of a silly little bot made in a more humorous way. An interesting thing too, you'll find it on Telegram. And the screener itself is free for now at the time of this video. I don't know if it'll become paid or not, it depends on the number of users. For now it's free because the servers cost money, it processes all this, and it's actually quite expensive to run. But at the moment it's free, and maybe it'll always be free, depending on how many people use it. So it's an interesting thing, you can check it out on Telegram, you'll find this screener, or in the description below this video, you'll find all the links there. The screeners are actually really cool. I like it myself, and all the programmers like it too. At the very top, the very first link, when you just get some notification, it says here how to trade using this principle. So that's also an interesting thing. Read the description to understand what's what and how it works. So it's a very, very smart and interesting algorithm, and honestly, it's pretty cool. It can be helpful sometimes. But be careful, it's a really strict, tough algorithm. I'll put it that way. Well, interesting. Look, regarding these dots of different colors, let's quickly go over them now. Look, we have these old versions of algorithms, so don't be alarmed. I'll switch now. Don't be alarmed because, well, yes, there's a lot going on, but it's all old, from the old... Look, everything you see, basically, we've crammed it all right here into these little dots, got it? So each individual algorithm, each one shows its own way, each its own direction. For example, there's the pro algorithm, which many people use, they like it, and they still like it, people specifically use it. So it's already built in purple, you see that color. It's built in, look, you see these big purple dots. This is the pro algorithm. So this version, it's large. It shows sell by, but it's built in right here. So simply, this algorithm is enough. It shows these big dots. There are many other new algorithms built in here, and also old ones have been taken. That is, old developments, old concepts, all of which are located here. So each one can be viewed. For example, KeepForce Pro is a trend-based algorithm that you can use to trade with the trend. So all these algorithms, they are also given as part of the base, also as an add-on. So you'll have everything completely. We look at these algorithms, we understand how to trade with the trend. For example, the Pro algorithm is purely based on signals, sell by, sell by. The only thing with sell by, the best thing is, as a recommendation for this algorithm, when it shows, for example, a signal, it's better to wait for the next bar and then enter from that next bar. So you can trade on the 15-minute, on the 5-minute, on the 30, on the 2-hour. So it varies, whoever likes what. It actually works on all algorithms. Time frames. So look, there are also indicators like MACD and RSI. While they are distinct, everything is built into this algorithm, indexing all the key ones into a single view, as they say, and calculating the average. So everything is built in here. That is, it is built into the sophisticated algorithm that meticulously indexes all the crucial key ones into a single, comprehensive, and easily digestible view, as they often say, and then precisely calculating the accurate average. If you specifically need the relative strength index, or RSI for example, many experienced traders and analysts genuinely prefer the classic, well-established version. It's certainly here, readily available, but it also thoughtfully includes clear and actionable signals for both overbought and oversold market conditions, thereby making it inherently superior and more insightful compared to the traditional classic version. So it's fundamentally classic in its core design, but with the invaluable addition of these intelligent signals, so you absolutely don't have to painstakingly sit there analyzing every single nuance yourself. Consequently, the typical chart often appears quite cluttered and overwhelming, right, as it were, with too much information. And we have diligently removed all of that unnecessary clutter completely. It was a long time ago, several years ago, and we have efficiently moved it all right here into this streamlined interface. In that particular sense, we thoroughly understand the need for clarity. Well, here's the ever-popular stochastic oscillator, which many people truly love and find incredibly useful, and it also, by the way, clearly shows explicit signals so that you don't have to meticulously look too closely at precisely where the line is positioned or where everything else on the chart is. It's specifically and intuitively shown with these helpful signals, so it genuinely assists in your decision-making process. Here's the renowned Japan trade. Now, this is actually a separate entire chart that you can view. It's just compressed and it shows like this. So MACD, which old-timers mostly like to trade using, and here everything is all together. All of this is also given as part of the base. As an add-on, it will all be there too. It's best, of course, to use this particular algorithm plus the liquidation map and add a small table, and that's it, basically. You see, you already see certain points you can work with. Also at these points, look, these points, they exist, each one can be analyzed, each color is a separate algorithm, so it's best to read about it on the website. I'll fast forward a little bit now, where it commences from here. Here are the points, and each algorithm performs its own functions. So this one performs here, read here what it performs, this one performs that, this one performs such. The RSI is red, so it's immediately clear. The red one is the classic RSI, which is shown right here. So you don't need to open it separately, it's already built in here. So there's this one you need to read, look. This video won't be big enough to cover it all. So basically read it, nothing complicated. Each algorithm performs the following. So the principle of it all, the essence, is that as many different algorithms as possible indicate a certain side, a direction. So for example, it indicated here, 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 here. Here it indicated once, here it indicated twice, even a third time. There's also bull, it indicated again. So basically, it's saying that we're going up. So it purposefully tells you where we're going now, based on various algorithms, which you can read about here, what each one means. You can turn them off, turn them on, whichever you like, whichever you don't like. So they are, in principle, some are on by default, some are off. As they are set by default, basically this has already been tested and is the best of everything available. But as a recommendation, sometimes you can also enable extra ones. So we do that too. So we understand, right? The more all the different algorithms indicate in a certain spot, which are additionally built into a small dot, that's one algorithm. If many algorithms indicate right at one point, they are shown here as 1 second and here a third, then it means, well, the probability that we will go up. So we understand, right? And you can often catch such setups and see what it will indicate. There's also another algorithm, it's also built in here, and it exists, but it's turned off by default here. So you can go into the settings and add it. So this is the ABC algorithm. So many people know it, many people use it. So we initially wanted to make ABC in 1, 2, 3, 4, 5. That is, well, since it's very complex and few people understand this kind of arithmetic and how these waves work. So we left the main thing, it's ABC, that's it. So after each ABC there's a reversal, ABC there's a reversal. So you can also catch excellent trades like these, which also have their place. Well, for now we've turned it off by default, you can only turn it on. So you find the settings, it's somewhere at the very bottom, you turn it on there. It's also an interesting thing actually. It helps many people. Well, if you know how to trade by waves, then yes, then yes. So this is how everything looks. Basically, you can see, right? So basically in this format, the entire set, it's available. How do we mainly trade? So we look for where there's overbought. So for example, it reaches 90.95. Here's the thing, when the bar closes, the history doesn't show all the maximum figures that were there. So the only drawback is in Tradingview, well, those are there, as they say, quirks. So the most important bar is the last one. That one shows the most current information. Or you can look here or in the table itself or the small table you enable. So we frequently find ourselves observing certain overheated market conditions. When the market is clearly overbought, we consistently find that in approximately 90 or 95% of these instances, it reaches its peak. At that precise moment, we strategically decide to enter a short position, and through this carefully considered action, we are able to successfully generate a profit. To the opposite figures. So for example, we entered at around 90, right? We'll exit at 10, but it's best, as I say from experience, it's best when you enter the chart and you see some good profit, it's better to partially unload, you understand, right? So that also needs to be considered. Look at what we see here. The price went up. You can see it reach this line, the ATR. In principle, that also tells us, we've approached such a line, there will be a reversal here too. It didn't reach the last line. That would have been a definite signal. If you look at the tunnel, you can see, right, it bounced here and here too. So in principle, it also indicated a reversal, and according to the trend, it's roughly in this range, which is how it behaved at this moment. Also, we were getting bear signals here, a small bearish one from this little table, which in principle isn't needed. You should only look at these main ones. It also indicated that, okay, it's falling. Here, it showed earlier with these small dots how well it worked, always indicating an upward movement. So here, when it started to fall, it began showing 1, 2, 3, 4, 5. So in principle, it was already clear, we're overbought here. The market is starting to fall. So in principle, you can enter a short and thus get profit. As we see on our stream, there's currently profit from a short position. There's also a very important point where the market is currently heading. So it's best to go and look at the market itself. What is it? Bearish or bullish? So now it will start in principle bearish. So that means mainly short positions. Before that, it was a bullish market, which was mainly bullish positions. So we always looked for longs throughout this entire period, roughly from 2024 to 2025. Many people were shorting and all that, but we mainly looked for longs, and it combines very well. That's why I say you need to combine both this algorithm and that algorithm. Then in principle, it's clear what's happening in the global market, and we take that information, transfer it to the local one, and see what positions we mainly need. Let's rewind a bit, not too far back, but also a moment like this, what Fibonacci was saying at that time. So it indicated the golden ratio, that's 0.618. It's here. So in principle, when there was an overbought moment and Fib indicated we'd go down, that's basically what happened. You understand, right? Well, it didn't quite reach, you can see the 0.618 golden ratio itself, but in principle, we saw the direction, so we could have partially, when the dump started, unloaded our position a bit and made a profit from that. And another point is that you need to look at the liquidity zone. It's marked here, automatically drawn. You need to understand liquidity zones. So if there's a liquidity zone here, it will most likely bounce. Just like here, a resistance zone, a liquidity zone where it will most likely bounce down. So we need to understand this. Over time, you just look and think, this is the situation. You look, and it's fine. What I mean is, over time, we constantly check the chart, right? We look at it constantly. So if we look without the chart, we basically have this. You see, trading in such a situation is very difficult. Well, okay, for beginners, I might draw a flag here. A very good flag, actually. It would be good in principle. Or say a flag or something like a tunnel, just to observe, right? Usually there's consolidation, all that. But where does the flag point? If it goes up, then technical analysis suggests an upward move, right? Look. Because here it showed overbought, and it went up. But based on the base, it says up. You see the flag. So, you understand how the flag works, right? All these flags and everything else. But if you turn on the algorithm, it's clear what's happening and how we should proceed. We basically see where the price will go. Our skills are now upgraded. We generally see what will happen, right? And we profit greatly from it. Here's another good formation. People ask what to do at 50%. Basically nothing. We patiently wait until a truly good and clear signal appears, then and only then do we carefully enter the market. We wait, a very good and discernible signal appears, and then we decisively enter. That, my friends, is the whole entire secret to successful trading. You absolutely need to be incredibly patient and disciplined. There's also a crucial point when, let's say, a 50% probability appeared, and you clearly see that the asset itself is consistently falling, already well below 50%. Perhaps even 40 or 30%. We have a specific and well-defined trading concept called taking the cream. So from 50% all the way down to 10%, you can also confidently short the asset during that entire downward movement. From 50 to 10, a small short. Or, for example, when we see it was already 50%, right? And 60% already. Then 63, 62, 65. And we see that it might go higher, but we're still waiting for it to be 90. Mostly we wait for reversals, right? But you can also, when it's 60, 63% going up, we can take a small long and take the cream, waiting until 90% or 92, 95. Well, 95 is very rare. In general, up to 90%. If it reaches there, that's also a small long and you can take it. Well, mainly everything for us is geared towards some kind of reversals. We wait for reversals, enter positions, and make a profit. Our stream shows this, and you can see how it works. There's another interesting algorithm called the up and down strategy. We choose a 5-second time frame. I'll explain why now. We input the price 115. What was it there for us now? 115, 270. Okay, 115, 270. The price should appear. You see, a line appears that triggers reversals and turnarounds. So for example, when the price goes from bottom to top, according to the established strategy, you can effectively activate this particular algorithm via a secure webhook connection, then seamlessly connect it to a chosen exchange, and it will then proceed with automated trading. Basically, all these sophisticated algorithms can be connected via a webhook for fully automated trading. We mostly perform the previous ones manually. This specific one, however, can be connected automatically via a webhook to any supporting exchange, primarily including Binance, OKX, and Bybit, though the exact availability may vary. We will connect to Binance and you can easily set up a webhook for completely automated trading. So, how exactly does this system work? A significant price reversal occurs. If the price moves from a bottoming trend to an upward trajectory, as soon as it precisely reaches this predefined line, an automatic long position is immediately activated and the price then continues to go up into profit. As soon as the price drops back to this critical line, a corresponding action will be triggered, meaning profit is made. No matter which way the price goes, you will always be in profit. This is very interesting, but there are pitfalls with this algorithm because you can get caught in a flat market. If you constantly open trades frequently, the deposit gets a bit damaged. This is the only drawback. We mainly find highly volatile coins. The main thing is to move away from this entry point. It doesn't matter which way the price goes, and you make a profit from it. This is a very cool thing. But there's one drawback, getting caught in a flat market. So if you know coins or methods for good volatility, this suits you. We also provide this algorithm as part of the whole package. It's available. We mainly deal with scripting, webhooks, and so on. It's interesting, and all of this will be available. About this algorithm, I think maybe we'll record a video sometime. It's very time consuming to explain and set all this up. For example, if you need such an algorithm, it's provided immediately. But you write to the managers, for example, that you need instructions on how to connect a webhook. So of course everything will be provided to you, everything will be done for you, shown to you in that regard. So primarily our goal is simply to create algorithms and then to use them, test them, and distribute them. Then it's interesting. So if this also interests you, then it's also interesting. Primarily, I repeat, we mainly use these specific numbers. So you could in principle not even use all of this and just activate the index insight algorithm. This one only shows numbers and you just use them. And as experience shows, with the help of this particular algorithm, which calculates all the best values, shows the average and displays it in each bar, and most importantly, all these numbers are not redrawn. This is very important. In trading and scripting in general, achieving such a thing is actually very difficult. And when we see this, when everything is static, stable, and works well, then ultimately we make a profit. As you can see on the stream, there are certain moments, profitable ones and unprofitable ones, but mostly they are all profitable. And you know, keep an eye on the stream to see how it all works. And for example, if you have these algorithms, don't rush to trade immediately. First, you need to observe a bit. So it works like this. like that. And you always need to wait it out. Remember, in trading, it's constant. It's like some kind of hunt. It's fishing. I don't know. You always need to wait it out. That's the most important principle. And don't be greedy, because you always want to find a position and it'll go up and we'll all, well, become millionaires, as they say. You understand, right? You know, so you always need to take profit, take profit, take profit. Don't be greedy. This is also a significant point, because everyone on our team is greedy. And I constantly tell everyone, no, you know, and always say, take profit there, and so on and so forth. So take profit and so on. Well, you understand, right? You know, well, there you go. Well, basically that's it, you know. Look, the essence of this video is to understand that all of us need to see, to observe. That is essentially, all algorithms are developed so that we as traders can see, can observe. That is, we understand what will happen next, because whoever possesses certain information based on algorithms or something else, that's also very important. So if we possess this information, we see what will happen in advance, and this opens our eyes. That is, all other traders trade in their own way, but we trade using these methods, algorithms. And we see more better than everyone else around us. I'll repeat again, I love saying the phrase that we are extractors, we and you extractors. We must extract something. But to see in this dark, as they say, forest, this market, this economic forest, dark and truly dark at that, we must have some tools. To have some tools so that, as they say, a flashlight in this dark forest and see the road ahead, what will happen, what obstacles, what risks, what else. So we understand, right? And all of us, all traders, should look ahead to what will happen. And if we see all this in advance, then we are already one step ahead of everyone. And then everyone around us will follow us and see what's what. But we already see everything in advance. That's the most important thing. In principle, with the help of all various algorithms, we can acquire various goods, cars, houses, and everything else. If we know the information in advance, what will happen, we are already one step ahead of everyone. That's the most important thing. That's it. Bye, everyone.